What is going on, YouTube? And welcome back to the Clear Cryptos educational channel. My name is T Haas from the Crypto Shop. And of course, I brought my man Jay Seals with me. What's going on, brother?
What's good, everybody?
Listen, guys, today on the channel, we're going to be covering a story about the Federal Reserve issuing some new interesting crypto banking restriction. Now, this is not regulation, not to be confused with regulation. These are banking restrictions in regards to crypto. So, Justin, take us through this article, man.
All right. So the Federal Reserve has issued new crypto banking restrictions within policy published today. The regulators have implemented a new policy that prohibits digital assets to be integrated into regulated banking due to concerns over security. The Federal Reserve Board issued a final rule today that interpreted Section 913 of the Federal Reserve Act to confront the integration of digital assets into the banking sector. The section sets guidelines and restrictions on member banks by the Federal Reserve. Okay, so let's get a little more clarifications on this. Where are we at? Oh, right down here. Okay, so although the rule states two clear notes to the Fed's existing legislation. First, the board prohibits member banks from holding digital assets, so they can't hold crypto. Secondly, member banks seeking to utilize such access must first prove the reliability of certain security facets and gain specific approval. So if they want to use crypto, they got to get approval from the big boss first. The published rule notes significant risk in regard to crypto asset sector, likely speaking to the criminal activity uncovered throughout last year, proves to be a massive black mark against the industry as it rebounds in 2023. The rule adds that it is particularly important for state member bank to have in place appropriate systems to monitor and control risk regarding crypto, additionally stating that the Financial Stability Oversight Committee that has observed that in the absence of fundamental economic use case, the value of most crypto assets is driven largely by sentiment and future expectations and not by cash flow from providing goods or services outside of the crypto asset ecosystem. So basically, they're dumping on crypto, right? Which we know the government loves to do. So what do you think about this new crypto banking restriction?
Man, it's coming, man. It's coming. Look, I feel like this is the calm before the storm, right? I think eventually we will get regulation. We will get some form of clarity. But I think the federal government or the Federal Reserve is basically trying to take care of banks first, especially after we're coming down from the highest inflation in decades, right? Where the Fed is just starting to get things under control. The last thing they need is for banks to actively be transacting in crypto, right? It's a very risque asset. No matter if you love your token, you hate your token, crypto is a very risky asset right now. So I think this is actually the right thing to do. Have central banks stay away from it from now until they can put regulations on it. I really don't think the banks should be messing with crypto as much as they as some of them are right now. So I think this is just a move that is kind of calculated by the Federal Reserve and kind of expected, in my opinion. So what are your thoughts?
Yeah, I mean, it's hard when you have a bank and the bank has to be FDIC insured, right? And crypto is not. So what happens if they lose all their money, right? Then their banks go out of business. And the last thing you want is for a bank backed by the Federal Reserve to be going out of business. That's the last thing that they want. So it just makes sense for them to kind of restrict crypto for now until everything is set up and everything is secure. Because I do think that the Federal Reserve sees the benefit of crypto, but they just can't be outwardly about it right now because everybody wants some money. Yeah, not yet, but they will be.
Yeah, I think when regulation comes, regulation will be that kind of like that bond in between, right? That'll be the thing that brings us together officially is regulation. So once regulation is there, then we can kind of classify it as its own asset, whatever that asset class may be. And then we'll be able to move on. Right now, I think this is just another caution in the wind type situation for the Federal Reserve. But that being said, you guys let us know what you think in the comments down below. Hit the like, hit the subscribe if you haven't done so already. Check us out for more videos like this on the Clear Cryptos educational channel. My name is T. Haas from the Crypto Shop, and that man below is Jay Seals, and we'll catch you guys on the next one. Peace.